these narrow ranges sort of is not what veteran traders want to see, right?
Yeah, that's correct. You've got essentially what looks like a paradox, almost a relentless series of record closing highs, 48 or so in the S&P, and yet the market doesn't have that verve to it. Seasonally, we're due for somewhat of a pullback. That hasn't shown up either. So traders are a little bit perplexed this morning after the two-day sell-off. We had some of the chat room bears going around pushing the fact that we had a back-to-back occurrence of something called a Hindenburg omen, and that's very technical. It deals with the relationship of 52-week highs to 52-week lows, and the bears say we've never had a crash without a Hindenburg omen, but conversely, not every Hindenburg omen brings a crash. So you've got partisans on both sides out there, Carl, pushing very heavily today.
Yeah. One of the bearish arguments I saw this week was that small caps, obviously, and semis, the action's not been reassuring, but that any pullback is hard to call for a strong pullback because the action on FANG Plus is so hard to read, and you would really need that to collapse a bit to bring you anywhere below, say, 4350, 4300. I mean, how much of that is a buffer, is a cushion, that action in mega cap tech?
Well, it is because there's such an enormously heavy weighting of the indices. They're weighted by their value within the index, and because they rallied and rallied and rallied, they become more and more important to it. So the premise is they're now such a big part that you can't really move the averages around without cooperation from them, and that's true. But in its own way, it's a mildly technical factor. But in the short run, it's an evident factor anyway.
Shepard Smith here. Thanks for watching CNBC on YouTube.